Welcome to Real Estate 360 with real estate expert Ken Renner. Ken brought in some intro music for us today and introducing it to the show. We did.
Actually, that's called, the intro there is called Austin Night Blues. It's a song I wrote, almost 25 years ago. When I first moved to Austin, I wrote it at the Radisson Hotel. And so several years ago, our band at the time put that together, went in the studio and recorded a full-length album. And so I just brought that up because I was like, you know what? One of my mentors and a friend of mine, her name's Fiona. She's in California. She said, she's been in real estate forever. She goes, Ken, nobody does music and real estate like you do. I mean, and you've got to introduce the stuff and combine them together. So I'm like, okay, since we are at the live music capital of the world, then I'm like, all right, at the end of every podcast, I'm going to introduce a song that you probably hadn't heard, but it has a real good Texas feel. And we are going out and playing live with our band. It's a hobby. My wife says don't quit my day job, so I guess she likes the
well. There's a lot of musicians in this town that have day jobs. That's kind of how they gauge success too. Is if you can quit your day job and just play music. A friend of mine once said about Austin. He's from Kansas City. He moved here many, many years ago, and I asked him why you came to Austin. He said, well, he's a blues player, Guy Forsyth.
Yeah, Guy.
And Guy said, you know what? You come to Austin to play the blues to get your master's degree.
There you go.
And that's always kind of stuck with me.
Yeah, we're talking a little bit about affordability on here, and that's part of the problem that we're running into is it's gotten so expensive in Austin. The musicians who are kind of, working for tips, it's getting harder and harder.
In a city that was built on their backs.
Yeah, and the pandemic
for many years
didn't help. The pandemic kind of shut that whole thing down, and now it's coming back. It's reviving, but it's good. Austin's always changing, right? And hopefully the music won't disappear. But I do know of a lot of musicians that are moving to more affordable climates.
Sure.
So, anyways, we're going to talk a little bit about the Austin real estate market. We're talking a little bit macro information and really talk about some of the kind of concerning things that's happening nationwide in the real estate market and also locally, and how it's affecting how our strategies are, how we're positioning our clients to be able to not only get the best investment, but now getting the best primary residence. And I think I said this even before the pandemic. I said my perfect client is someone who's in Bay Area or whatever that has a rental property to exchange and turn that one rental into property to 10 properties, and then tax deferred, no taxes on that, and then maybe a primary residence where they can sell it and get their $500,000 tax exemption and move them to Texas. So you got primary residence and then 5 or 8 rental homes from the 1031 exchange. So that's why I'm speaking out, and it's actually been helping people do that.
All right, well, let's get into it.
Okay, well, I've got the stats here for December, and so we're looking at median price $476. Honestly, it's still not that much higher than the median price across the nation, so we are still relatively affordable. I mean, if you think about all the way across the nation, but it was up 30% from December to December, and so. But one of the things that we really opened my eyes is that last year, this is when I call it the hockey stick, when the values went like that, had to do with, if you look at this, months of inventory previously in December it was 0. There was no inventory. We're still in an inventory issue crisis. We have 0.6 months. I mean, about a half a month, 2 weeks worth of inventory in Austin Round Rock MSA. So how does that lead to what's happening as far as prices, about bidding wars, blind auctions, and all that? And we're going to get into that in a little bit. But I want to first talk about the macro news, because that's affecting everything that comes down, trickles down to our micro news, and how we are positioning our clients to best take advantage of it. So we've been traveling around, me and my assistants and other agents. We've been going around. We service an area of 150 miles north, 150 miles south, with 300-mile radius in central Texas. And what we've been noticing is that a lot of subdivisions have stopped building or are severely limiting their building. Right. And it has to do with some very important supply chains. We've seen shortages of all kinds of names of things I've never heard you'd have shortages of. Right. One was transformers. We went into a subdivision in New Braunfels. There's a whole street of houses being built, but those green boxes out front?
Yeah.
No transformers. Wow. They're stuck on a ship somewhere, right?
Wow. Wow.
And then, it's affecting everything. And it's one little thing can prevent the construction of like our pool. We fortunately got our pool in before this supply chain. There was PVC shortage. We got in before that. And now he's saying there's like 20 pools that are being held up for what? Those little LED lights. that go in the bottom of the pool. They're all what, $12 a piece,
right?
Holding up a
but they can't $150,000
pool
without them.
Can't put water in it without them. So when I was out in California back in October for a wedding, we were staying on the beach, and that picture that I have here of the cargo activity was exactly what I saw here. I saw, as far as the eye could see, was cargo ships sitting there waiting to dock. Then I started following what was going on in the news, because this is pretty serious. I mean, it was like Armageddon. I mean, it's like, as far as you can see, freighters that are just sitting there, and then
people losing money while those things are sitting there.
They're charging 40, 50%. I mean,
it's crazy.
4 or 5 times more for each container, and the manufacturers are getting really upset about that. And so the cargo's just sitting there on the docks. We have not just a supply chain; we have more products than we can get moving. It's a truck driver shortage. It's a warehouse shortage. We're ordering stuff. But it's affecting the building industry, because lumber went back up again. So we're seeing shortage on windows, on air ducts. But the one big thing that's going to be very concerning is the chips. Thank God Samsung's building a $17 billion facility here in Austin, because the chips that are in everything, every appliance, all the way to your smoke detectors. If you don't have the chips, you can't close on a house. If you don't have the appliance, you can't have the appliance if it doesn't run because it doesn't have a chip. Yeah. So, we've already seen the cost of used cars go up 38%. And so, bottom line, with all this shortage, we are headed towards potentially an inflationary situation, because the people that are building the houses, or just anybody, the truck drivers driving, they're all going to ask for higher wages. The material costs are going up. So we're heading into some very scary, actually, inflationary times. So what does the Fed do? The number one tool they have against inflation is interest rates. And we've already seen, as the Feds have indicated for the first time in so many years, that they're bringing the rates up to slow the pace of the economy. Obviously for home buying and for real estate, higher rates are not good for our investors or for our primary residents. And another thing I've witnessed over 40 years of doing this is, when the rates start going up, there's even more of a rush for people buying houses because they're like, oh, get in before the rates go up. Right. So for our people that have bought recently in the last few years, enjoy your low interest rates, because it's probably the last time you're going to see them in the near future, probably in the long future. So rates are going up.
Even the raising of rates substantially is nothing in comparison to 15-18% that we saw in the 80s.
Oh yeah, that's the thing that we hope won't happen.
Right, and yes, we do.
and because that's it. See, the cost of all the materials go up, and then your wages go up, which also costs everything. But your money buys you less.
Right.
That's the problem with inflation. So the Fed's job is to try to keep it in check, but not overheat it or cool it. But I'm more concerned about what's going to happen with not being able to. We're 5 million houses short in the United States from the last recession 12 years ago, because the builders stopped building what they needed to do to keep up with. We're 5 million houses short. That's a macro picture.
If I remember correctly, you called this months ago.
A couple years ago. Yeah, because what happened was we'd do these communities, and they'd have 60 houses sell in a weekend. And I'm like, and the neighboring community down that had 80 houses sell in a week. I'm like, oh, how are they going to build it? And with all the stuff stuck on container ships, we're going to have a shortage. And that's where I think that we're heading into right now. We're seeing most of the builders, even north and south, even in our submarkets, are now not selling to investors. We're running into a limited amount of supply for investors. Right. We'd also have a lot of people now relocating, and we're focusing on usually the tech area where they're the Apple hasn't even opened up yet. Their new facility. It's a beautiful facility, by the way. I drove by it. It's really nice.
I bet it is.
And I talked to an Apple employee yesterday, and he goes, well, the building's nice, but everybody's working from home anyway. But they're coming here, and they're kind of tired of the economics and the politics of the California market, and they're coming out here.
The regulation and the legislation and everything.
And taxation without representation. Yeah. So anyways, this is a national article that just came out. Just to give you a point here, home builders are desperate for quick and inexpensive materials, even turning to Home Depot and possibly even Congress for help. I mean, Congress, you're getting
Yeah.
That's a big deal. So one of the things that here that kind of proves my point is home builders can't find basic materials they need to complete the backlog of construction projects. So we were at a house this last weekend with a client. He bought 2 houses in this neighborhood in Divine Lake, and it was dead stop because they couldn't get air ducts. The ducting for it. And I said, well, when's it going to close? It's supposed to close in a month or so. He goes, oh, probably June, July. So when the properties being built get delayed, guess what happens? It raises the cost, their interim costs to the builder to hold that inventory. Yeah. So not only is the materials going up, the labor is going up, and there's a shortage of that. Now also we also have the cost of interest of carrying those houses for longer periods of time. So what that reflects to is it's going to be higher prices in housing. And real estate, whether it be primary residence or investments, has always been a good hedge against inflation. Because if you think about it, it's basically a collection of commodities all put together. It's 250,000 pieces to a house, and they're all put together, and it's a collection of commodities. Says a National Association of Home Builders claims that in 2021, more than 90% of the builders reported delays and material shortages. So here's another thing. What these builders are doing, just like the pool companies, when they had a shortage on PVC, guess what they did? When they found a supplier of PVC, what did they do? They bought all of it and put it in a warehouse. Yeah. That's also causing problems. We hear builders are storing up, hoarding air conditioning units. Yeah. So this is putting even more pressure on the supply chain, because it's kind of like the builders, toilet rolls, they're storing them, therefore causing even more of a shortage. Right. So, all right. Well, that being said, not really doom and gloom if you've already owned real estate, and it's not too late to get into our markets, and we're going to cover that. One of the things that we are doing is we are also looking at not only helping our investors, but having these relocations. People are coming to our area, mostly in the high-tech corridor, medical and high-tech people, and we're there to accommodate them. But we're also looking at what we can in the new construction. So right now, some of our Austin's been shut down pretty much to investors for a couple of years, and but also if you're owner occupant, that's fine. But you can probably take a year to get your house built. Just keep in mind if you're starting from scratch. And so what we've been doing is we have a team that goes out and looks for opportunities and makes friends with the on-site agents who are the frontline workers at the builder's model. Mm-hmm. And so I had a couple of texts that I was going to bring up. I couldn't find them, but what it was a builder in San Antonio. We made friends with her on-site agent, and she texted me and said, I'm calling you first. I have until 4 o'clock to sell this before it goes on to the open market. And we were able to get that to our clients and be able to have a property that never hit the market. So that's what we're doing, is a lot of off-market properties, because we're building relationships with these on-sites. The thing about that is you can't do it very easily if you're calling from 405 area code. They don't know you at all. There's no relationship. You're talking to an online concierge who you may never talk to the on-site agent. So we are in their front door and hoping that they will give out of their back door those properties that hit the market they allow for investors. So looking at some of the stats here, this is from Zillow. Sorry, their Zillow offers went south. They lost only $500 million on that one.
Right.
So
yeah.
That's what happens. This is real estate industry is not an algorithm isn't going to work for you. I mean, they really just didn't know. There's many articles of how they lost $500 million.
Yeah,
and
did.
Okay, so shareholders are probably pretty upset about that. But so I got this. This is from Zillow, but it's the top 10 hottest markets in the nation. And if you'll notice, number 10 now is Austin. It used to be on the top, and it's
1 or 2 or 3
because it's relative affordability.
Yeah,
and high job growth. We have the high job growth, but we don't. Our relative affordability to the rest of the nation has dropped. In fact, there's articles talking about that we're the most expensive market outside of the coast. So, but if you notice on the list here is number 4, and that's San Antonio. And so we were just talking about the musicians not being able to afford here. Guess what? Guess a lot of them are moving just 50 miles south. And they're living at half. Our houses in San Antonio are 50 to 60% of the value they are in Austin, and we're getting the same rents.
San Antonio is a great town too.
It is. It is. It's actually where we go do our staycations. One thing on this stat from Zillow, though, at the very top, I really like this as being an investor myself. Rent up 21% in the U.S. as inflation climbs to historic highs. So not only the price is going up, but the rents are going up. Guess what? If you have that low fixed rate mortgage and the rents keep going up, then your cash flow increases. All right, so we're going to go see what Open Door has to say about the hottest zip codes in the nation. And guess what? We have right here a couple of our markets. Leander, Texas, number 2. That's right around the corner from us. I live in Liberty Hill, Georgetown, Leander, all tied together. That's the heart of the high-tech corridor. That's right where I live. And we're putting together some really nice marketing pieces for for the high-tech corridor, an index of every subdivision and every builder, so you don't have to go searching through the internet yourself. So we're going to help our clients with that. Number 4 on the hottest neighborhood zip codes is New Braunfels. We've been working that market for several years, and everybody's done really, really well. Now, New Braunfels is about 35, 40 minutes south of Austin, but it's between San Antonio and Austin, and so it had seen pretty much steady growth in price increase, and then all of a sudden the hockey stick. And so what I tell people is, I kind of talked about this several months ago. I said the wave of appreciation is moving out from Austin and going out to the submarkets because people drive to affordability, and they're willing to drive, or availability. And nice thing about San Antonio is they have inventory,
right? And
they're still for now somewhat investor friendly. And that will save time too, because half of them won't talk to you as an investor. So you can call 50 builders and 25 aren't going to. We already know who's not selling. So I want to show you the example of the hockey stick. This is a house I own on Dodge Cattle in Avery Ranch. In fact, I have a listing coming up and that looks just like this right down the street. That'll be in under $600,000 for a 2,300 square foot house. If anybody's interested in that, they can give me a call, but that's coming up here pretty soon. But this one actually is my house. And if you notice, you can see what I call the hockey stick. It was pretty much steady growth all the way up until middle of 2020. And then it doubled in value. And now you also see the little tail off. And that's what we're seeing right now. Because it went up so far, so fast, 40, 50, 80% appreciation, and it just was too much. We're seeing some buyer resistance. Now, it doesn't mean all areas and all zip codes are not seeing buyer. We're just seeing it starting to level off, but because of the shortages, and because of the spring buying season and the low supply, we're still going to see price increases in Austin. They have to go up, but probably not as fast. Certainly not 4% per month like we saw with this house. Next, if you look at this other house, is the one I own. This is in one of our submarkets on Fieldstone, and you can notice that a nice steady growth on the value, but now it's hockey sticking right now. So what we're trying to do is definitely find the places that haven't done the hockey stick appreciation rate and get our clients in at the low interest rates. I mean, 4% is still a great interest rate. That's what we're looking at on non-owner occupied. All right, so we are still in a big housing shortage, especially in Austin. The submarkets are opportunities, and we're working those diligently and daily, looking at what's available, making friends with on-sites, going down there and finding the inventory, cherry picking it, and tying it up for our clients. Now, one of the things I'm also going to be doing is focusing on the Northwest corridor, the tech corridor, because that's, like I said, my perfect client is somebody's selling a house in California and wants to buy where everybody else is moving here. And so I've got an article in there a whole newspaper that I wrote for my community, which is Santa Rita Ranch. We won't go into it, but on the next podcast, I'm going to go into more detail about the Northwest Tech Corridor. Santa Rita being the #1 ranked subdivision in the area, eventually going to be over 8,000 homes. They're about quarter of the way through that. And just it's at the epicenter of all these other subdivisions in the Northwest Tech Corridor. So that being said, love to set up an appointment with our clients. Also, many of our clients who already purchased homes from me, or maybe many years ago, I've really kind of gotten a commitment this year to be much more in relationship with our clients. Not just, we did 154 transactions 157 transactions, 45 million plus another 15 under contract, so over 60 million in transactions. That's a lot for a small team. But what I'm missing that I know I have to be better at is being nurturing and communicative with our clients, especially the ones that have already put their faith and trust in us to buy a home. So that's my commitment. And so if you are a client of mine or want to be a client, just book callken.com. That's my scheduler. If you just had a property that you'd like to know what the value is, because property tax time's coming up, I'll be more than happy to run the numbers for you, and hopefully you'll be pleasantly surprised with what your home or what your investment has done. So please schedule at callken.com. So that's kind of the update for January, and it's actually February 1st. Thank you for hanging out with me.
You're welcome.
And we're gonna go ahead and do an outro with a little bit of the music we're talking about. Yep. This song I wrote at the Radisson Hotel. It's called Austin Night Blues. The lead singer is actually my appraiser.
Oh,
wow. The guitar player, one of the reasons I'm bringing it back, my guitar player just passed away from a rare blood disease, and so want condolences to his family, but also honor him. That's why we're playing these songs at the end of each podcast moving forward, so that we can memorialize his incredible guitar playing. The keyboard player was Michael Ramos, who is the keyboard player for John Mellencamp and Patty Griffin. So there's some really, really stars on it, and of course I wrote it and recorded it and produced it, and so we'll be bringing some more of those tunes for you to listen. So enjoy Austin Night Blues, and I'll see you on the next podcast. Thanks, Sandy.
I never did you no wrong. Yeah, she told me when I'm asleep and you snooze, you're gonna lose. Yeah, she told me when I'm asleep and you snooze, you're gonna lose. She said if I could take a hand soon, I'm singing the Austin Night Blues. Yeah, you know she's got me singing the Austin Night Blues. Yeah, you know she's got me singing those Austin Night Blues. Yeah, my baby, she done left. I ain't got nothing to slow. Yeah, I went down to the river where the music's so slow. I went searching for my baby, searching high and searching low. Yeah, you know she's got me singing those Austin Night Blues. Yeah, you know she's got me singing those Austin Night Blues. Baby, she didn't live. I ain't got nothing to lose. The guitar. She saw my new bone. She crashed my new car. Now she's backing down and smoking a big fat cigar. You know she's got me singing those Austin Night Blues. Yeah, my baby, she done left. I ain't got nothing to lose. One more time. You know she's got me singing those Austin Night Blues. Yeah, you know she's got me singing across the night blue.